What if I told you, one of the best performing stocks of the last 2 decades might still be one of the safest ways to invest in the US stock market? We're talking about Visa stock. A company that makes money almost every time someone swipes a card, taps a phone, or pays online. But here's the question that's dividing investors in 2026. Has Visa already had its big run? Or is this still a stock you can buy and hold for the next 10 years? Stay until the end, because I'll show you the one reason some investors are still buying Visa, even at today's price. Why Visa is different from most stocks. When people think of Visa, they think of credit cards. But Visa is not actually a bank. It doesn't lend most of the money. Instead, Visa operates one of the world's largest payment networks. Every time a transaction happens, Visa earns a small fee. That means whether consumers buy groceries, book vacations, shop online, or pay with their phones, Visa benefits from the growth of digital payments. And that trend has been growing for years. The trend most investors ignore. Here's something important: cash usage continues to decline in many parts of the world. More payments are moving to credit cards, debit cards, mobile wallets, online checkout systems. Visa sits right in the middle of that ecosystem. So the real question isn't just, will Visa grow? It's, will digital payments keep growing? And many long-term investors believe the answer is yes. The bull case for Visa stock. Why do so many long-term investors like Visa? First, it has a powerful business model. Visa doesn't need to build factories or ship products around the world. Its network scales efficiently. Second, the company generates strong cash flow. Third, Visa has historically rewarded shareholders through growth and buybacks. And finally, the business tends to benefit when consumer spending increases. That's why many investors view Visa as a high-quality compounder rather than a speculative stock. But here's the risk. Now let's talk about what could go wrong. Because no stock is perfect. Visa is a large, mature company. That means it may not grow as explosively as smaller AI or technology stocks. Investors also watch economic slowdowns, consumer spending trends, competition in payments, regulatory changes. So if you're looking for a stock that could double overnight, Visa probably isn't that story. But if you're looking for a business with a long operating history and a dominant market position, that's where the Visa thesis becomes stronger. The question everyone asks: is it too expensive? This is where many investors get stuck. They look at the chart and think, I missed it. But great businesses often look expensive compared with average businesses. The more important question is, can the business continue growing earnings over the next decade? If the answer is yes, today's price may matter less than many people think. That doesn't mean Visa is guaranteed to outperform. It means long-term investors focus on business quality, not just short-term price moves. Should beginners buy Visa? Here's my view. If you're a beginner, a diversified ETF should usually be the foundation of your portfolio first. Then, if you want individual stocks, companies like Visa can become a smaller part of that portfolio. This helps reduce risk while still giving you exposure to strong businesses. Many successful investors think in terms of core portfolio, ETFs, satellite positions, individual stocks. Visa often fits better in that second category. The biggest lesson most people chase whatever stock is trending this week. But wealth is often built by owning excellent businesses for a very long time. Visa may not create the same excitement as the hottest AI stock. Yet it has something many investors underestimate: a business model that keeps collecting small fees from billions of transactions around the world. And those small fees can add up to enormous profits over time. Final verdict: so, is Visa stock still a buy in 2026? If you're looking for a dominant global business, exposure to digital payment growth, strong long-term fundamentals, and a stock that many investors hold for years, Visa remains a company worth researching. If you're looking for explosive short-term gains, other stocks may offer more excitement, but also more risk. For many long-term investors, the goal isn't to find the next lottery ticket. It's to own businesses that can keep growing year after year. And that's why Visa continues to stay on so many watchlists in 2026. If you enjoyed this breakdown, subscribe to Wall Street Pulse for more videos on Visa stock, dividend growth stocks, ETFs, passive income, and the US stock market. Next, we'll compare Visa versus MasterCard to see which payment giant may be the better long-term investment. See you in the next video.